Okay, everybody, here we go. It's me and you against the freaking world, I think, in a lot of ways here. So post-market wrap-up on this Tuesday, September 6th, 2022. People, look, how do I put this another way? Liquidity is drying up in the market, period. Global bond yields continue to rise. 10-year yield 3.34 last time I looked at it. The dollar, the Dixie, did break 110 today. No surprise to you. I told you I believe that would happen, and I still think it's got more upside here. Look at what's happening here. You got cash bleeding out of the debt market. Global bond yields are rising. This is putting pressure on the stock market. This scenario here, in a micro sense, is exactly what I have been warning about for 10 years, longer than 10 freaking years. I have been saying at one point a meltdown in the debt market is going to occur. Yields are going to spike, and that's going to put pressure on the stock market. Okay. It's exactly what we're seeing now. I mean, but just a tiny, tiny bit. When the debt market finally, and it will, begins to implode, okay? We're marching right into a liquidity crisis here, and it's going to melt down the stock market. 80% is pretty much a guarantee off of the top for the S&P 500. A market crash beyond anyone's wildest dreams, and I mean that, is going to sweep the globe. Okay, the globe, and people are going to be wiped out. Although a lot of that wealth is just going to be transferred like it always is. Remember, cash does not grow little money wings and fly away. No, it moves from one reality into another. Okay, and in my view, debt market meltdown, stock market meltdown, cash just moves. It moves into other assets. It doesn't just fly away. This is why I've been telling you, physical gold and silver, in my opinion, commodities across the board are going to go absolutely ballistic at one point here. So, look, the MMRI continues to rise. I hope you're watching this thing. Mannarino Market Risk Indicator, again, free to everybody. Link in the description of this video. We'll see where that goes here, but I don't like what I am seeing here. I don't think you like what you're seeing here. The market obviously doesn't like it, and the bad economic news keeps on coming. So the U.S. PMI, which is another measure of economic activity here, cratered in August, absolutely cratered. Do you know something? Every single forward-looking economic indicator, every one, is all saying there's trouble coming. In other words, we haven't seen anything yet. Duh. Can I please get a duh? Maybe a duh. Duh. No, nothing. Okay, this is just the quiet before what's coming here. And I'm talking about a storm on a scale that people aren't going to believe. That's really the truth here. And I don't really believe many people are ready for it. I think you are. If you've been following this blog, you're seeing things unfold just like you expected it to do. Watching the debt market here, realizing the debt market is the key here to everything that's going on. Watching the action of central banks continuing to buy the debt here. I'm telling you, and I've been covering this as of late, last couple of weeks. Unless there's some action here by the Federal Reserve to stop bond yields from rising, other central banks around the world too, to get in here and stop buying more, although the ECB already said they're buying it all. Okay, so that should tell you something. If we continue to see this kind of action and we don't get some stability here in the debt market, when I tell you it's over, I mean it's over. And I'm not just talking about the stock market, I'm talking about the financial system. Okay, they're setting it up. It's a setup. All of this is just the prelude to what's going to come here. A liquidity crisis, a credit freeze. This whole system is going to lock up. People are going to be in the streets. Finally, people will take to the streets screaming, where did my money go? What am I going to do? How am I going to get things I need? Because it's going to stop. Transactions across the board are going to stop. There's going to be an emergency meeting called between the Federal Reserve, other central banks, and their respective governments. What do we do? They already know what they're going to do, okay? A new system. A whole new system's coming. You know that. I've been telling you all this for a very, very long time. No secret, no surprise, I don't think, to anybody. Anyway, on top of the continuing bad economic news, which will not stop, expected to get much worse moving forward, let's talk about the market. So early on, this market had a gain across the board, triple digits for the Dow, S&P looked great, beautiful. Then 10-year yield starts to rise, dollar gaining more strength. Like I said, Dixie over 110. Market doesn't like it. It senses what's happening here. Liquidity is drying up, and who knows? Let's see what the Fed does. Is the Fed going to be increasing its reverse repo program? In other words, I don't know, add a couple of more trillion overnight, faking the illusion of liquidity as they pass cash back and forth between institutions? That's all this is. It's a scheme to fake liquidity. The system is drying up. I don't know another way to put this. And when it finally realizes that this is just a Ponzi scheme, because that's all it is, look, every Ponzi scheme ends the same way, okay? In order for a Ponzi to work or continue to work, it has to continue to find other investors to participate in the scheme. Same situation here. Without pulling more debt into the now from the future, like every other Ponzi, it will collapse. And when a Ponzi collapses, it collapses completely. So understanding that, and I'm not just talking about the financial system as a whole right now is insolvent. You know that. It's going to implode on itself here. It's illiquid, it's insolvent, and that includes the stock market, that includes everything connected to this, because it's not real. It's not on the elemental chart. It doesn't exist. The derivative exposure to everything, I mean, that's really the dark underbelly of this entire thing is the derivatives market. Most of you know what it is. The derivatives market is nothing but side bets. Side bets on an underlying asset. You can have a derivative of anything. I use Apple stock all the time because most people know about Apple stock. Could be Microsoft, could be a big bank, don't matter. But just pick stock XYZ. Now, a derivative is something that derives value because of what the underlying asset is actually doing. And there are layers of them, multiple layers above and below. And it's just side bets. This all it is. It doesn't exist. It's not on the elemental chart, just like everything else. This whole thing is just a big fat Ponzi, and it's drying up, people. Anyway, let's go back to the market real quick. You got gold and silver falling under a little pressure today. Cryptocurrencies getting hit pretty good. Bitcoin under 19,000. Crude oil relatively flat today. But look, this is all well and good. This is all beautiful and lovely and it's fun to look at. But the bigger deal, by you can't even imagine how big, is this instability that is persisting. The instability is persisting in the debt market. Now, again, whether they're going to let this thing completely implode, that's the question. All right, let's ask the question yet again. Let's call the question. The question is this, people. You ready? Okay. Do you believe right now we're going to end up seeing this accelerate? In other words, global bond yields ballooning faster? Or are central banks going to do more? I have been of the opinion for quite a while now, for when this whole thing started, after watching what happened. You remember what happened? Look, let's put a perspective on that. We watched the 10-year yield make a nearly 100 basis point jump from 2.5% to 3.5, a little over 3.5. Fed jumped in here, started buying more, kept the rates suppressed here, kept the 10-year yield suppressed. Okay, now, so I've been saying the Fed's going to get in here and they're going to do more. I still believe that. I could be deluded. Maybe I am deluded. But it doesn't look promising to me. I would have to believe it doesn't look promising to you either. We know what the eventual outcome is. It's very simple. Implode the system by design. First of all, inflate it beyond anyone's wildest dreams. Then allow it to implode. The bigger they make the bubble in debt, the harder it's going to implode. The bigger the outcry is going to be. And the ripple effect of this is literally going to rock the foundation of the world. And that's the truth here. And it's going to precede a resource problem, which I have spoken about many, many times. Global debt and the human bubble. We've created a population boom, global population boom on the back of surging debt. Global debt and the population have risen in tandem, people. What's going to happen? You tell me when the global debt bubble bursts. Do you think the global population is going to continue to grow? No, it's going to collapse. The global population will collapse. And it's going to be biblical. I don't know another way to put that. Anyway, so that's pretty much it for today. What do you think? Please ponder what I have spoken about. I would love to hear from you. Please comment here. And you're going to see me in the morning, and we're going to sift through the dog shit like we always do. Isn't it just all kinds of fun? Love you a lot. I mean it. Share the video.